Welcome to the Deep Dive. We unpack complex topics, give you the essential knowledge fast. Today, we're plunging into something that really sent some shockwaves through tech and finance, AMD's Q2 2025 earnings. And here's the kicker. Despite what looked like, pretty solid revenue numbers on the surface, the stock absolutely plummeted. What on earth happened? Did China sanctions just kind of kill their AI dream?
It's that kind of paradox Wall Street just loves to throw at us, isn't it? You get seemingly good news, but then something else maybe unexpected completely spooks the market. So our mission today is really to unpack these, contradictory signals, understand that intense market reaction, and dig into what these earnings really tell us about AMD's future, especially those big AI ambitions they have.
That's right. And to give you the clearest picture, we've pulled together a whole stack of sources. We've got AMD's official results, shop analysis from places like The Motley Fool, A-Invest, and even the real-time pulse from StockTwits and Reddit, so you're going to get the full story quickly and thoroughly. Let's start with that headline shocker then. Why did AMD's stock take such a massive hit when they actually reported record revenue? It just seems, counterintuitive.
It absolutely does. On the face of it, immediately after the Q2 earnings dropped, we saw AMD's stock trading down significantly. We're talking a sharp drop, like 6.3% to 9.2% lower in after hours.
Yes.
And that didn't stop. It carried right into the next day's trading.
Right, and what makes that so wild is they announced record revenue, $7.69 billion. That comfortably beat Wall Street's expectation, which was what, $7.43 billion? Usually beating revenue like that gets a cheer, right? So why the cold shoulder from investors this time?
Yeah, this is where it gets fascinating. It highlights that crucial difference between meeting expectations and beating them, especially when a stock is, as analysts say, priced for perfection. So while the revenue beat, their adjusted earnings per share, the EPS, came in at $0.48. Now, that figure met what analysts expected. It didn't exceed it.
Okay, so meeting isn't enough when the bar is super high. Exactly. Think about it. AMD's stock had already surged, 44% year-to-date going into this report. So investors weren't just hoping for good numbers. They were expecting exceptional, maybe even record-breaking performance. Just hitting the target, even a high one, it wasn't enough to satisfy those really elevated profit expectations already baked into that stock price. It's like training for a personal best, hitting your target time exactly, but the crowd thought you were going to break a world record. That's a really important lesson, especially in high-growth tech. You've got to keep blowing past expectations. But okay, the single biggest shocker, the thing that really seemed to send investors, running for the exits, was this huge charge, roughly $800 million. What exactly was that about? How did it mess up their numbers?
Right, and this takes us straight into how geopolitics can just slam into a company's financials. AMD took an approximately $800 million charge. It was mostly an inventory write-down plus related expenses, and this massive hit was a direct result of U.S. government export controls, specifically the ones restricting the sale of their advanced instinct MI308 data center GPUs to China. Those are really key chips for high-end AI work.
Wow. $800 million is definitely not a rounding error. That's a significant blow. What did that do to their actual bottom line for the quarter?
Precisely. It translated directly into a GAAP operating loss of $134 million for the quarter. And just quickly, GAAP is the standard accounting rules, the official numbers. So a $134 million loss, that's a huge reversal from the positive operating income they'd shown before. And it also hit their gross margins hard, dropped them to 40% on a GAAP basis, 43% non-GAAP.
Non-GAAP being the adjusted number.
Right. Non-GAAP usually adjusts for certain things like one-time costs or non-cash items to give you a clearer view of core operations. And AMD themselves said, look, without those export-related charges, their non-GAAP gross margin would have been around 54%.
54%? Wow. So that's nearly a 10-point swing just because of those restrictions.
Exactly. A huge impact from a single issue.
And this obviously had a ripple effect, right? Because the data center segment, that's supposed to be AMD's big growth engine, especially with AI. But we saw a big slowdown there, which must have worried people.
Oh, indeed. The data center segment, which is, absolutely critical for their whole AI story, it grew only 14% year over year in Q2. Now, put that in perspective. In Q1, they grew 57%, so 14% is a sharp slowdown.
Yeah, that's quite a drop-off.
And it was primarily due to those same headwinds hitting the MI308 shipments to China. Even though demand for their EPYC server processors was strong, it just couldn't offset that MI308 hit. And looking bigger picture, some analysts are already suggesting this could mean like a recurring $1.5 billion annual revenue drag for AMD if those China export licenses stay delayed. That's a structural risk you just can't ignore.
A potential $1.5 billion annual drag.
Yeah.
That's huge. It really shows how global politics can directly hammer a company's finances and, well, its growth story. But, okay, it can't be all doom and gloom in this report, can it? There must be some silver lining somewhere, otherwise things would look much worse.
Oh, there absolutely is a significant silver lining, definitely. Despite these, let's face it, pretty formidable challenges, AMD still reported that record overall revenue, $7.69 billion for Q2. That's up 32% year over year. And maybe just as important, the company generated a record quarterly free cash flow of $1.2 billion.
Okay, free cash flow. That's the real cash the business generates, right? Not just accounting profit.
Exactly. It's a vital sign of financial health. It shows disciplined execution and that the underlying business operations are actually generating real money, despite the headwinds.
And this is where it gets really interesting for investors, I think, because beyond those high-profile AI chips hit by the export rules, AMD showed some really impressive strength elsewhere. What stood out in their client and gaming segments?
Yeah, the client segment, so that's mostly PC processors, right? It actually hit a record $2.5 billion in revenue. That's up a massive 67% year over year, driven by strong demand for their latest Zen 5 Ryzen desktop processors and what they call a richer product mix. Basically, people buying more expensive, higher-end chips.
Okay, so PCs are doing great for them. What about gaming?
Gaming also surged, up 73% year over year to $1.1 billion. That was boosted by more semi-custom revenue think chips for game consoles and also strong demand for their Radeon GPUs. So it clearly shows their core business outside of that direct AI chip export issue is actually pretty robust. It's thriving.
Right. So while the AI headlines grabbed all the attention, the sort of bread and butter computing and gaming parts were absolutely firing on all cylinders. And AMD CEO, Lisa Su, she seems to be staying incredibly confident despite all this turbulence around the MI308. What's her message?
Yes, she expressed strong confidence. She said she's seeing, quote, robust demand across our computing and AI product portfolio. Huh. And she added that AMD is well-positioned to deliver significant growth in the second half of the year. Look, this isn't just the CEO putting on a brave face, I don't think. It points to other drivers, a product roadmap they really believe in that can gain momentum even with these headwinds. She's signaling, look, we have other powerful engines for growth.
Okay, and what are those future growth drivers? What are they pinning their hopes on for the second half and maybe beyond, especially in AI, to sort of counter that MI308 impact?
Well, the big one they're highlighting is the rapid ramp-up of their AMD Instinct MI350 series GPUs. Now, these are specifically designed for AI and data centers, but they're distinct from the restricted MI308. Alongside that, they expect to keep gaining market share with their EPYC server chips and the Ryzen desktop processors. And what's really promising for their AI strategy, the MI350 series, they say it's actually ramping ahead of their own expectations. And it's already being adopted by 7 of the top 10 AI model builders globally.
7 out of the top 10 AI builders. That's a pretty powerful signal of demand and capability, isn't it?
It's a huge validation, yeah. Shows the technology is compelling and their pivot is working, at least in terms of adoption.
And their outlook for Q3, still optimistic even with the ongoing MI308 situation in China.
They are indeed optimistic, yeah. For Q3 2025, AMD is guiding for revenue of about $8.7 billion. Now, that's actually ahead of what analysts were estimating before this earnings release.
Oh, interesting. So they're guiding higher despite the current headwinds.
Exactly. And importantly, they expect their adjusted gross margin to bounce back strongly, up to 54%. Now, the key thing here is that this optimistic outlook still doesn't assume any revenue from MI308 shipments to China. They're not baking that in yet. However, CEO Su did note they've received, quote, good indications that the necessary export licenses are moving through the review process. But even without those MI308 sales to China yet, she still expects their overall Instinct revenue, so the AI chip revenue, to grow year over year in Q3 just because of that MI350 ramp.
So they think the MI350 can pick up enough slack even without the MI308 for now.
That seems to be the plan, yeah. It tells you they have a strong backup strategy in place.
That's a fascinating balance, isn't it? Acknowledging the current pain, but projecting significant growth from these other AI products, which really brings us to the deeper dive, doesn't it? Beyond just the quarterly numbers. While AMD shows resilience and strategic pivots, it's crucial to understand that even the best internal execution can't fully shield a company from these bigger market and geopolitical forces. So let's maybe take a deeper look at those current geopolitical chessboard, supply chain issues, and how these might be shaping AMD's valuation and path forward, maybe even more than these quarterly beats or misses.
Absolutely, and it brings us to a really critical question. How much of AMD's future is actually in their own hands? The U.S. export controls are a huge factor. They create significant uncertainty, not just for AMD, but really for the whole semiconductor industry. This is bigger than one company. It's part of this broader, intensifying geopolitical fight over tech supremacy. And to make it more complex, China is pushing hard for AI self-reliance. They've got homegrown solutions like Huawei's Ascend series advancing quickly. So what that means is, even if AMD does get those export licenses approved down the road, they could still face shrinking market share in China long-term as local alternatives get stronger. This isn't just a short-term blip. It's potentially a long-term strategic shift in that market.
Right. So even if the rules change back, the game might have already changed. And what about the supply chain? I know AMD relies really heavily on TSMC for their most advanced chips. Is that a risk, like a single point of failure? It's definitely something investors watch very closely. That heavy reliance on TSMC, Taiwan's semiconductor manufacturing company, for their cutting-edge chips, it does present a potential bottleneck, maybe even a single point of failure. Unlike their big rival NVIDIA, who are reportedly trying to diversify some of their very advanced 2-nanometer production to Samsung AMD, seems still heavily tied to TSMC. Now, this concentration could limit how fast they can scale up production if there are unexpected delays or, manufacturing issues. Or critically, if there's geopolitical instability affecting TSMC in Taiwan.
Yeah.
It's kind of a double-edged sword, right? TSMC gives them access to the best tech, but it does put a lot of eggs in one geographical and corporate basket.
Yeah, that makes sense. And this makes their AI strategy pivot even more critical, doesn't it? We talked about the MI308 being for AI training, which you mentioned generally has higher margins. Now they're focusing more on the MI350 series for inference. Can you just break down that distinction again and what it means for their profits? Yeah, it's a really crucial distinction. The MI308, the restricted one, was aimed squarely at high-performance AI training. Think of training as the really heavy lifting part, where AI models learn from enormous data sets. It's like teaching the AI from scratch. It's computationally intense. These training chips are incredibly complex, need huge processing power, and because of that, they usually command very high profit margins.
Okay, training is the heavy lifting, high margin part. What about inference?
Right. Now, with the MI350 series, AMD is focusing heavily on AI inference. Inference is where a model that's already been trained applies what it learned to new data. So like using the AI to answer a question, identify an object, make a prediction based on its training. Inference chips are absolutely vital for deploying AI everywhere, but the competition in that space is generally tougher. And unit-by-unit inference chips typically yield lower margins than the top-end training chips. So while getting the MI350 adopted by those top AI builders is fantastic news for market share and volume, the shift in focus will likely take time for that volume to fully offset the higher margin dollars lost from the restricted MI308 training chip sales, at least in terms of the overall profitability mix. It's a smart adaptation, but it does have financial nuances.
That's a really important point for investors to grasp. It's not just about selling any AI chip, it's about the type and the margin. And speaking of investors, the whole valuation debate around AMD has been pretty fierce. Their stock trades at a really high trailing PE ratio, you mentioned, like 127 to 128. Can you quickly explain what PE means and why AMD's look so well inflated?
Sure. The PE ratio, price to earnings, is a basic valuation metric. Simply put, it tells you how much investors are willing to pay today for each dollar of a company's past year's earnings. So a PE of 127 means investors are paying $127 for every $1 of AMD's trailing earnings. That's extremely high. It usually signals massive investor confidence in future growth, but it also makes the stock very vulnerable if there's any disappointment.
Okay, but why does AMD's look so particularly high? Is there something specific going on?
Well, some analysts argue that the GAAP PE, the official one, is artificially inflated. This is mainly due to significant non-cash amortization charges related to acquired intangible assets, especially from when they bought Xilinx a few years back. Think of it like this. When AMD bought Xilinx, they acquired valuable stuff like patents, tech, brand value. These are intangible assets. Accounting rules require them to gradually write down or expense a part of that acquired value each quarter. For AMD, it's roughly $600 million per quarter in these charges. But crucially, it's a non-cash expense. Cash isn't actually leaving the company today because of this. It's an accounting treatment reflecting a past purchase. So while it drags down the reported GAAP earnings, making the PE ratio look higher, it doesn't impact their cash flow or immediate operational health in the same way. This distinction fuels that whole priced for perfection debate, because investors are really betting on future cash flows, not just reported earnings.
Okay. That's a vital clarification. So the sticker price might look higher than the underlying cash-generating reality, but the market's still demanding stellar performance from a cash flow perspective. Okay, finally putting this all together, how does this immediate, very negative post-earnings reaction compare to how AMD stock usually behaves after earnings? Is this level of volatility unusual for them?
It's a good question. While this immediate reaction was undeniably negative, looking back at historical data tells kind of an interesting story. It might offer some comfort for longer-term investors. Historically, AMD stock has actually often shown positive short-term performance after earnings releases. There was data suggesting something like a 64% win rate over the 3 days following past reports. So what that suggests is, while near-term volatility is pretty much guaranteed for a high-growth, high-expectation stock like AMD, and we're certainly seeing that play out right now, the longer-term trends can still be upward. That is, if the underlying fundamentals stay strong and those strategic pivots like the MI350 ramp really deliver the goods, it's just a reminder that one tough quarter doesn't always define the whole story.
So what does this all mean for you, our listener, looking at AMD? We've definitely seen a truly mixed bag this quarter. Record revenues, yes. Strong performance in core computing and gaming, absolutely. Yet there was that very significant blow to profitability and that critical AI segment growth directly tied to geopolitical factors. But the company's strategic pivot to the MI350 series and their optimistic outlook for the second half, well, it certainly shows resilience and adaptability in a really complex world.
Absolutely. AMD is navigating some incredibly complex waters right now, no doubt about it. Their future in AI seems tied not just to their own innovations and roadmap, which are clearly impressive, but also just as much to these unpredictable currents of international trade policy and the intricate dependencies of their global supply chain. It's a real high-stakes game they're playing.
That really is the challenge, isn't it? As AMD navigates all this with their AI future tied to both their own tech and these huge external forces, what stands out to you as maybe the single biggest factor that will shape their path forward? Is it going to be their product innovation, their skill in navigating global politics and supply risks, or maybe something else entirely? We'll leave you with that thought to chew on. Thanks for joining us for the deep dive.